Do you think the recent move up in oil prices is justified by the numbers and the forecast that you've seen and that you have?
No, is the simple answer to that, Brian, and great to be with you again. The reality is we still think the worst is still to come. I'm here in London, feeling festive, but the lockdown has been reimposed, and we're going to see more lockdowns. So we do see still some challenges to demand as we go into, through this winter period and into early 2021. You're right. OPEC is showing some constraint, but they are bringing barrels on slowly as of January, 500,000 barrels a day more. They want to keep prices, I think, down more in the 45 to 50 range rather than where the more optimistic prices are currently trading. So I think there are some challenges not only on demand, but also keeping that supply constrained, but not allowing the prices to get too strong, which would overstimulate US shale production.
Of course it would. And by the way, we used to track pretty closely those Friday rig count numbers. And oh my goodness, after months and quarters of going down, down, down from 900 to 250 operating wells in the United States, they're starting to tick back up. Do you think those heavily indebted U.S. shale producers, they're all ultimately, it's every man and every well for itself?
Well, it's certainly been that way for a long time. But as you know, Brian, this year has been a bit about consolidation. It's bigger players. Bigger players are going to show stronger capital discipline. They're going to manage their capital. They're not going to overreact. And although we've seen these increases in rigs, we're still about 100 rigs away from being at a level where we could sustain production at today's levels. So we do see that shale will decline through the first half of next year before recovering again in the second half. And we think the shale producers will be a little bit more careful around how fast they return. We've seen permitting in federal lands has dropped now since the election results. We saw a large growth in permitting in federal lands. We don't think the Biden administration is going to stop fracking immediately, but certainly we are seeing now a little bit more cautious play there. So be careful not to overread too much into those weekly rig increases.
Yeah, that's a fair point. And by the way, without getting political, I mean, if the Democrats ever have their eye on Texas, which we know that they do, going after fracking may not be the smartest political play. I'm just going to throw that out there. Now, I had tweeted out yesterday because I was just in Texas and Louisiana the last couple of days, Chris, driving around. My plane, the airports were packed. My flights were sold out. There's cars. Once you get out of the New York area, people are, and probably the same with London, people are moving around a lot more than we are. But I saw you thought that refiners may struggle. You don't think that refiners could have a big year next year as spreads tighten and margins hopefully come back up?
Well, we're still sitting on a huge overhang of distillates. Although you talked about stocks tightening earlier on, the amount of gas oil that's still around, and usually as you go into winter, you expect gas oil stocks to be drawing down, they still remain high. And it's the one part of the barrel which still remains weak and in strong contango, incentivizing people to store rather than to draw the oil out. So that continues to put pressure on products. We've seen driving is lower. We saw that over Thanksgiving. We saw much lower driving. We're likely to see the same over the festive period across the world where people are not going to be able to travel to see their loved ones. They're going to be staying at home. They're going to be heating their houses. They're going to be using gas and electricity to heat their houses and cook their dinners in their smaller groups, but they're not going to be driving. So refiners are going to continue to struggle. And it's not only the lack of demand that's causing a problem, it's also biofuels is starting to grow in its penetration. And we have what we call more natural gas liquids. Those are the light liquids that come from gas production, which are used to make petrochemicals, which is also growing strongly at 4%. And that substitutes the need for refining. So refining continued to be under pressure, certainly next year.
Shepard Smith here. Thanks for watching CNBC on YouTube.